Ladies and gentlemen, welcome back to the High Performance Trader. I'm your host, Joshua Salvetti, and today we're breaking down week 3, July 2025 of our favorite day trading strategy, the HPT cross. And this is a 3-step approach that me and my team use each and every single day to get in and out of that market with way more confidence, way more control, and way more conviction. See, if you're anything like I used to be, you're probably day trading every single day with guesswork, with emotion, with gut feeling. And let me ask you, truthfully, honestly, how's that working for you? It sucks. There's nothing worse than showing up to the market every single day with no direction, with no strategy to believe or trust in. And that's why 10 months ago we set out to gather data on a very simple 3-step approach. And that's exactly what we're going to be breaking down today. The data, the results, right? We want to know if it's working, how well is it working, if we should continue to use it, etc. So if you click the links below in my bio, it's going to bring you to my website, okay? And my goal is to make sure you have all the resources that you need to trade this strategy, okay? So if you come here, you could subscribe to the data reports, which we are going to be going over today. I send these out every single week, every single Sunday. I send out every trader that subscribes to these data reports, okay? So that you could get the information, you could study the information, you could get more informed on what's actually working and what we represent over here at the High Performance Trader. If this is your first time watching this, make sure you dive deep into the strategy. The simple 3-step approach. Number 1, identify the critical level, okay? This is the level with abnormal amounts of volume. Number 2, you identify the moving average cross. We like to use the EMA cloud, makes it very simple to spot. And then the RBI, GBI entry criteria, okay? This when you get a red bar that gets ignored or a green bar that gets ignored, and then you follow the EMA cloud, which is the 5 and the 20, all the way up to your desired target. Check this out. There's tons of information here on the website, and if you want to join our team, click the links below, see what our Discord is all about. And I'm currently still accepting only 3 more traders that want to get involved in the Trader Bootcamp Summer Special. Okay, this is 1 year full access to me, my team, my army, so that you could trade with us each and every single day on our Discord. Okay, so check out the resources below, get involved. It's extremely valuable. So without any further ado, let's break down some data. Okay, so I started out on this journey, this data accumulation 10 months ago. The goal was to identify a strategy that actually works. Okay, so like I was talking about in the beginning of this video, there is nothing worse than relying on guesswork or emotion. So it was literally the only thing I could ever think about was coming up with the truth. Does it work? Should we use it? How do we know it works, right? And fortunately, I have a background in data analytics. So I combined the two, and here we are 10 months later, okay? So we have a large data review, meaning over the last 10 months, where do we currently stand? So we've taken 198 setups. 159 of them have been profitable for at least $1, and then 39 of them have been losses, okay? So once again, we're sitting at an 81% win ratio over the last 200 trades, right? So out of 200 trades, 160 of them worked pretty much. And that is exactly how you need to look at trading. Way too many of us, and I say us because this literally used to be me, is we're trying to be green every single day. Now the problem with that is we start to make emotional, irrational decisions that lead us to inconsistent results. We FOMO into trades, we guess, we make decisions based purely off emotion, and next thing you know, we're right back where we started with really or little to none positive results. Okay, so it's better to look at it from a large data review. Over 200 trades, 160 of them are going to work. This is how we make our decision-making process, right? It's not, oh, will this trade work? Well, let's wait for the next one. No, it's here's my 3-step criteria. Let's get into the trade, okay? So what is that 3-step criteria? So right here, you'll see it's a very simple graphical presentation of what it is we're looking for. So every single day, we identify the open. This is the 9:30 bell price. Ding, 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 bell goes off. That's open print. Number 2, we're looking for the moving averages to cross. Like I said before, this is the 5 in the 20-day EMA. This makes up the EMA cloud. I don't care if you don't use the EMA cloud, that's fine. But guys, find a way to make it very visual. Okay, this way, when it's red, you're looking for shorts. When it's green, you're looking for longs. And then you get the red bar right here that gets ignored. What defines an ignored candle? Let's talk about it. The high of this candle, let's say it's 624. That means the high of this candle, or not the high, but that means that this candle, the following candle, not 2 candles after it, not 3 candles after it, I'm talking about the following candle, breaks the high of the previous candle. Therefore, buyers are ignoring the sellers on the previous candle. That makes it an RBI. That makes it an entry for me. And what this does is it makes it very simple. When you see this 3-step approach, there's no if, there's no but, there's no what, there's only entering and exiting. Okay? And this is the goal. To extract the emotion out of the trade and rely on the data. You can see here on this trade, it was an absolute banger. Super simple. We actually traded this live on YouTube. So just so you know, every single Friday, we trade live on YouTube. Make sure you like, subscribe, check it out, come join us. Okay? So without any further ado, let's break down week number 3 over here in the data report. All right. So 7/15/2025. And another thing that I've been collecting data on is the orb. There's a lot of talk about the orb on social media, okay? So what HPT is going to do is we're going to collect data on it. We're not just going to tell you, oh my God, look at this amazing trade we took. We're going to go, okay, over the last 200 trades, does it actually work? And if so, how well, etc. So we've started collecting data on the orb this month. The orb is currently sitting at a 70% win ratio, okay? And how we define an entry, you know how I'm very specific when it comes to the HPT cross. The orb I want to be specific on. This does not by any means mean when we break out, we go long, okay? So what defines an orb stands for open range breakout, okay? This means the first 15 minutes, you identify the high and you identify the low, okay? So like on this one right here, we would draw a box around the high, which would be right here, in the low. That would be the open range. Then we would get the breakout, which would be on this candle, breakout. And then how we like to trade it is the retest. When we get a retest of the orb, which would have been on this candle, that is where we're looking to enter into the market in the intended direction. Okay, if we can get an RBI out of orb, that's even better. Okay, red bar ignored out of the orb, you take it long. Okay, so once again, just to be clear, we're not entering on the breakout, we are entering on the retest of orb. Okay, this can be done on the 2-minute, the 5-minute, doesn't matter. All right, so let's break into week 3. All right, first trade of the week was 7/15/2025. Okay, so once again, we got open print. We have a moving average cross, and then we get a green bar that gets ignored. That is where we would get into the market short. We would be targeting this blue line right here, which is previous day high, and then end of day, which was down below. So we would get in the market short. Where would our stop loss go? Directly above the previous candle that was ignored. And this is why, okay? This is market structure. This is how the market speaks to us. Look at this. Once we get this green candle, which is ignored, this is telling us sellers are in control. They got the ball. They are dominant. According to the strategy, once we see this setup, there is an 81% chance that price is going to continue in our direction, our intended direction, for at least $1. That's based off the data of the last 10 months, okay? So when we get in short, we have to allow the strategy to breathe. We got to let it exercise, okay? And the way we do this is by putting our stop loss above the previous candle so that we do not get wicked out, stomped out before we're supposed to, okay? So this was a beautiful trade. You can see here, price came back up into the green bar ignores area. I like to call this the area of value, okay, because it's very valuable. If you miss that first short play, you can always re-enter when price comes back into the area of value. And then price continued. You can see how well that EMA cloud held price. Okay, very beneficial. Number 2, 7/16/2025. This was a loss. Okay, now once again, there's nothing wrong with this trade. I'd trade it again tomorrow. Price rips off the open. Look at open print being a wall right here, an absolute wall. It's because the volume's there. Sellers are controlling it. Price rips down. We get a moving average cross. So now I'm looking for that green bar to be ignored. It gets ignored. We get in short and we get stopped out on the next 5-minute candle. Boom, we're done here. Does this mean, oh my God, should I change my strategy? Should I do it differently? Should I have X, Y, Z? Absolutely not. Okay, this is the analogy I like to use with all my traders in my mentorship. Okay, our strategy is like pocket kings. Okay, say you're playing blackjack and you get 2 kings. 2 kings have a pretty high chance of landing you in a profitable hand. So you bet money on it. Okay, is a king a perfect hand? Absolutely not. What beats a king? A blackjack. But a king is going to land you in profitable hand more often than not. Therefore, the probabilities, the data tells you to bet money on a pocket king. Okay? This is one of those scenarios where the pocket kings just didn't work. This is how you have to look at the game. Okay? This is how you get away from emotional decision making and you step forward and lean into trading with probabilities. It's extremely important that we shift our mind to this perspective. Okay, that was a loss, but check this out. This was a win. Price literally sold off. Powell speaking. Price is going all over the place. We got crazy market volatility. But do we just walk away for the day? No, we avoid garbage price action, which was all this, and then we wait for the moving average cross at the critical level. This on the 5-minute time frame always. And then a red bar got ignored. We captured a beautiful long play. Okay, once again, look at the area of value holding as it's retested. Okay, guys, the area of value is going to always direct you. Okay, this is the level. It's a zone of the candle that was ignored. So if it's an RBI, you draw a box around it. If it's a GBI, you draw a box around it. This really helps me stay grounded in price action. Okay, and then this was the last trade. This was on Friday. I didn't take this trade because price action was very choppy, but I still wanted to document it for data driven decisions. Okay, the more data we get, the better. This did fall under our approach. Now look, we got open print. Okay, moving average cross to the downside, moving average cross to the upside, moving average cross to the downside. This is exactly why I didn't trade this. Okay, this is what I like to call indecisive price action. Okay, I don't want to participate in the market when it's super choppy. I'd rather wait for market conditions that actually pay and that are fruitful. So once again, you do not always need to trade. Okay, just because price is moving doesn't mean we have to participate. It's better to build a relationship with price action where you're just staying patient, you're diligent, you're waiting for price to present to you profitable and fruitful opportunity, and then you execute. Okay, so if you would have had hypothetically have gotten into this short play, you would have gotten stopped out on this candle considering you were keeping a healthy hard stop, and this would have been a loss. But look at how well price still followed the intended direction. Okay, so once again, we have to come to the conclusion. When our criteria is present, it's telling us something. It's telling that one side of the unbalanced market is more dominant than the other. That is the purpose of trading this approach. It's to help you, regardless of how you feel or what you think may happen, direct you to trade with the dominant force in the market and to trade it confidently. So guys, I really hope that you like this data review. Once again, if you want to take advantage of this this crazy offer of a 1-year access on our team, $150, you get 4 coaching sessions, me and you breaking down this simple approach so that you can execute it to the best of your ability. Click the links below and get involved. And if you guys just want the data reports, take advantage now. I send these out weekly so that you can become the absolute best version of yourself. I'm Joshua Salvetti. Thank you for your time. Thank you for your patience. And I will see you in the next lesson.